We're here on the dollar yen on the 15-minute time frame, and in front of you we're looking at a flag pattern. And what I want to do is take you through the top-down analysis and how we came to the flag pattern and why I'm looking at extended targets on this particular trade and why my stop is in this particular level as well. So here we are on the daily time frame, and for the dollar yen we've pretty much been in consolidation. What we've had recently is we had this move lower, the pullback, lower, and then here this was something I was looking at yesterday. We was at the structure zone, and today yesterday what we actually did, we actually violated that zone. So there's no trend here, it's still consolidation, but with a violation to the upside. Now, quite importantly, this bullish candle here for me is a violation, indicating that we could go higher to the tops here, and so I need to bear that in mind, particularly when we look right and we see an even handled number at the 112 hundredths. So as we drop down the time frames, we can see that I actually had a couple of things here. I actually had a violation trade. In fact, I'll talk through this first because this ties in with the flag pattern, and I've placed my stop in a position that if the flag fails, then I still have a chance of the violation trade winning, which means that I kind of have two chances at my targets being hit rather than one. And this is something that I'm trying to develop in trading, trying to not look at just putting my stop just at the normal place for the pattern, but if we are indicating that we're going higher, could I put my stop in a better place that would, even if the pattern failed, still allow me to go on and win the trade? And I've managed to do that a couple of times this month, and I missed out on a few instances, and this is still a learning curve. But the violation trade, if you don't know what it is, go and look at my YouTube video called Euro Aussie violation trade, missed 110 pips I think it was. And basically we've had a momentum move through the structure zone, and I'm looking for a pullback into the wicks. Now the wicks come anywhere around this zone, so anywhere in that highlighted zone is where I would look for a buying opportunity for the violation trade, and my stop would only be 5 pips below the higher close candle once I got my entry. Now here on the 60 you can see that we had the momentum move through, and this is where you can look at the flag pattern. I think I actually drew it out in the 15-minute, but this is how it looks. And for me, when it comes to flags, I have very specific rules. I have a lot of rules for flags, depending on if we make a new structure high, depending on the fib ratios, depending if we're in a trend, and I put all that information together and then look at where the market could potentially turn. I also look left for structure and even handled numbers. So what I'm going to do is leave on my three fibs that I use for getting involved within these trades. Now I need a minimum of a 382 to be hit, and I need 3 touches in this instance. Now we've got the 3 touches and we've hit the 382, and this highlighted area that I mentioned before is the violation zone, where if this flag fails, and just on the flag, just look at the fluid movement we have in the channel. This is exactly the type of movement I like to see when I look at taking these types of flag patterns. Lovely harmonic moves in there. We can look at this as well as being some sort of rejection candle, and if we drop down to the 15-minute time frame, okay, I'm just going to remove the VS1 levels off. One thing I was looking at here was that this double bottom, now it's not a double bottom that I can trade, but this, when I start to see sideways movement, so we come down, we hold, we rally up, we come down, and just here we've rallied up again. This type of sideways movement is usually the sideways movement like this before we get the breakout. Okay, and now it doesn't mean that that's going to happen, so I still need my stop in the right place, but it gives me a reason to enter. And of course, like I mentioned before, we do have this, I wouldn't call it a low test candle, but it's certainly a wick down into this area. And so here it gives me my entry reason. The only thing it doesn't do is it hasn't come down into previous structure, which is this highlighted area, which we know is the wicks. So what I want to do is, if this flag fails, I want to ensure that my stop is underneath that level. So here we go. So here is my stop. We are around 3, 4, 5 pips underneath there, which is what I would be for a violation trade. And if I go back to the 60, my targets are based off the 60-minute time frame. And what I'm looking for here is a retest of the candle highs minus a couple of pips. So in actual fact, I can go a little bit higher there. Oh no, I can't. So the close of the candles comes in at 111.79. So 111.77 is my target, and I am playing for an extension as well. And I'll tell you why I'm playing for just less than the 127. So let's take off these fibs, and just while I'm here, I'm just going to draw out as well my risk. Red for risk, and we're going to have this as green for target ones. So I'm only just getting a 1-to-1 here, but it's allowed me to have double the chance of the trade winning, or at least an increased chance, because I'm effectively trading two styles for the market to go up and placing my stop in the most appropriate position. Okay, yellow, there we go. So if I zoom out and pull this down, and what we want to do is look left and put in a structure zone, I'm actually going to drop to the 240. I'll go up to the 240, should I say, which is obviously the structure level is going to be 4 times greater than that of the hourly. And look where that structure line comes in at. We've had the closes on the 4-hour dead on the 112, and the 127 comes in just above it at 112.02. So I'm going to want to be underneath that psychological number. I cannot tell you the number of trades in the past that I've been in, and that psychological number has just stopped me from getting targets. And as a result of those psychological numbers, I did an additional 3 months worth of back testing to look at psychological numbers and other things as well, and lo and behold, it was significantly more profitable taking targets before the psychological number. So that means now then that I am risking on this trade 18 pips. Not a very big trade, this one. In fact, I think it was a bit more than that. I'll go back and do it. 20 pips, and we have here 41 pips. Let me just double check that stop. Yeah, 20. So a 1-to-1 risk to reward, but as mentioned, if the pattern fails, I do have the other trading opportunity, which may win and puts me in a far better position. So we'll come back to this trade and see if we can hit targets or not. And we're back for the second part of the video, and we're lost. 19 pips, and we did everything. I did what I thought everything possible there to turn that into a winner, but the fact is we never know what the market is going to do. If we look at the 240 as well, you'll actually see that we've now closed on the 4-hourly below the wicks, and what that does is that then invalidates my violation trade as well. So simply log that as a losing trade.